All right, we are live. Roy, how is it going, man?
I forgot to remove my Palantir cap autographed by Alex Karp. My bad. Let me take that off. Yeah, it's
Oh
going
my
good,
God,
Tevis.
the flex. What the heck? Signed too? That's amazing.
Yeah, it's actually the first time I put it on. I couldn't resist though. Yeah, I got this
And
this last week. So while
and
you were
it's
off vacationing, this was pretty nice. It's not like me, the man himself, but yeah.
it's also Dr. Alex Karp, as
Yes.
Matt so often corrected me. He's like, well, Dr. Karp has a vision. I'm like, Dr. Karp, what the heck is this? But that's great, man. That's amazing.
Yeah, once next year when I'll defend my dissertation and get my doctorate, we'll be on equal footing. Not really, but yeah, got a little bit of other merch too, but that was the highlight. So yeah, good week this week. Nice to have an extra day off. You guys don't do Labor Day or anything like that on Monday, right?
Yeah, we did. That's why I took vacation because we had Monday off as well.
Okay.
Um, which is yeah, it was good, man. Like it feels like I haven't done a show in much longer than I've actually been out because we did bootleg last week and we're doing bootleg this week and like nothing has changed. But for me, it feels like 2 months have passed since like the last show, which is I guess a byproduct of actually being able to take a break
Yeah.
and turn off your brain for a little while. So that's been good.
Yeah, I think the weirdest thing about when you do disengage like that and you actually disengage, like the headlines, just seeing those shift from a week ago, like everything's great, no recession, things are awesome, to today, recession. I don't think that there's much fear. I haven't seen a lot of fear, but there's concerns in the market again. And honestly, like we had a little bit weak ISM report on manufacturing, but I mean, yeah, I think it's probably just people taking profits and some seasonality that we'll talk about tonight. But yeah, those headlines can really switch on you fast. That narrative tends to chase price action more than anything. And
Yeah, I just pretend that I am completely in the dark around all the news that happened from Thursday until today because I pretty much am. I don't know anything about anything. I bought some more hymns while on the beach, and
that's why it
I
keeps going
think
down.
I think I'm gonna. Yes, exactly. I think I'm gonna buy some more QQQ this upcoming week. I know the market was red today. That's all I know about anything.
Well, throw this up. We'll start with this one. So one of the best gainers over the last year, Nvda, it went down about 10% today. That's not shocking for Nvidia because there are days when it pulls back. It had earnings last week. They beat expectations, but this is their first time in a year that they've had a very difficult comp because they had that massive acceleration that they reported in quarter three. Uh, yeah, and as a result, this is the first time they're trying to compare to that. So it looks like it's slowing down, like not really, but it's not like growing by the insane amount that it was before. So, but I think people are maybe taking profits. But now the question in my mind is, so it went down about 10%, and then this news comes out after hours. 10% on no news, even on a weaker day for NVIDIA, that's a little bit suspect. So the news, of course, is if you're listening, NVIDIA got subpoenaed by the Department of Justice, escalating the antitrust probe. And so there's basically a series of this that initially what happens is the Department of Justice will request information. This is going from request to demand, that it's legally binding, that they say, hey, you have to give us this information. And so it doesn't mean that anything's going to come from this because, frankly, every single company in the Mag 7 is going to get these from time to time, just the nature of the current administration, like it or not. And I think that there's some things that are warranted here. It's just NVIDIA, my understanding is from Department of Justice perspective is they don't like, and they specifically cited a couple of different things, the monopolistic practices of NVIDIA. And one of those was pricing, that if NVIDIA, from their perspective, NVIDIA penalizes you if you do business with another provider as well as NVIDIA. Really, from NVIDIA's perspective, it's like, hey, if you give us all your business, we'll give you a cut. So
Right.
I don't know how far this is going to get, but my question is, Tevis, Do you think somebody knew something? Is that why it went down double digits today before this news came out?
Okay, so it fell 10%, and then this news came out.
Mm-hmm.
And what did the indexes do? The Qs fell today, right?
I mean, Nvidia is like what percent of the Nasdaq?
No, my point is like, was it a huge red day, or was it like just a normal red day? But either, yeah.
Yeah, the Nasdaq fell 3%, and between today, which is a good drop, including after hours. Now, overnight trading, it's down another percent. Nvidia right now, I had it up just a second ago, and that's one of the things I love about Robinhood. When they have 24-hour trading, you can. I don't use it ever, but I like to follow and see what's going on. Keep in mind, this is very low liquidity. There's been some volume traded on Nvidia today, but it's like nothing compared to regular hours. This is probably reversed. It's reversed, yeah. Nvidia is down to 103.70, so it's fallen another 4% overnight. So it's about down just a little bit shy of 14% right now.
Wow. This thing trades like a penny stock, man. It was like up 30% in a month, down 30% in a month, like goes around and around in circles. Insanity. Yeah, like I think with all big news like this, somebody always knows something. A telltale sign would be looking at the options market, like go follow unusual whales or somebody like that, and take a look at some unusual options activity. Like if you're loading the boat and buying, $50,000 or $100,000 or $500,000 of like, puts expiring this week, then it's like, okay, well, that's a little bit suspicious. In terms of the actual probe, I think it's very commonplace, and I think I could argue both sides of it, right? Like I understand that Nvidia has absolute pricing power, and they can just basically name their price for all of these. I saw something like Microsoft is 19% of Nvidia's revenue. Like it's insanity. Meta is in there. Tesla. I saw Elon just posted about the
H100,
the H100s,
Colossus.
and so exactly their whole Colossus project, and like Nvidia has pricing power, so they can do whatever they want. Do we want the government to be controlling that? I mean, depends on where you fall in the political spectrum. I'm more libertarian in that perspective, but I do understand the monopolistic sort of tendencies that a lot of these bigger companies have to throw their weight around. At the same time, though, like in that space specifically, the pricing power comes from massive resource constraints, right? Like it's not like, Nvidia, like you have no other alternative. It's just everybody is strapped for resources. AMD is making money, all of these other companies are making money. Everybody who's in the semiconductor space, who's in AI, they're so like Broadcom has done terrific this year. And so I think that with Nvidia, like they're suffering from their own success a little bit by inviting this DOJ probe. Is it going to yield any results? I doubt it. I really doubt it. It's like a sell the news type of event,
Yeah, these things sort of happen. At most, they'll get a slap on the wrist, honestly. So throw up this real quick. This is unrelated to what we planned to talk about, but somebody mentioned in the comments, so I pulled it up. And yeah, sure enough, there goes Bitcoin, down 5.5% today. Of course, it tends to be on times when there's a bit more volatility to the downside. It's like a leveraged QQQ. So yeah. Are you still holding any Bitcoin or miners or anything?
Did
you buy Bitcoin? Bro. Is that why it's? Did you buy some Bitcoin? No. Is that why it's tanking?
No, I have not bought Bitcoin. I am owning Bitcoin. It's my third largest position. I've been in Bitcoin for quite a while now. I have no plans of selling Bitcoin anytime soon. Miners, I do own CleanSpark. That's been taking a hit. But again, those things go in lockstep with Bitcoin, right? So I'm not really worried about that. Like if Bitcoin goes to where we think it's going to go and Bitcoin hits 80, 90, 100,000, like CleanSpark is going to cross that 20 threshold and just go higher on that news alone. It doesn't really make sense to me why. Well, we'll see what happens, I guess. But right now, my understanding, and I could be wrong, but my understanding is that it costs much more to mine Bitcoin right now than the actual market. And so in that situation, the miners are just stop selling so that the supply constraint drives the price up to the point where it makes sense to sell anymore. I could be wrong in that understanding, but
it depends on the miner.
yeah,
I mean, so if you own miners, basically they're a little different strategy than master strategy, but you have the philosophy of like, hey, the more Bitcoin we can hold, the better. Iron is the one exception to that. They tend to have a less hodl amount, is what they call it, the amount that you hold. Before the halving, Bitcoin miners tend to hoard that up. And we didn't see the price appreciation like many were expecting, including myself, after the halving. So, yeah, as a result, I haven't looked in about a month, but yeah, they were still holding it pretty aggressively because it just didn't make sense to sell. So,
well,
but yeah,
yeah,
I'm still in Bitcoin. I've got one miner I actually sold part of it when it was like twice this price because I'm like, hey, I think we're going to get a pullback. September is always, by the way, we'll talk about seasonality. It's weak for the stock market, but it's terrible for crypto. And there are exceptions. Last year was not bad. So, but if you have a long-term horizon, like, do I think that Bitcoin will be trading at this price or less in 5 years? No. Now, is Bitcoin diluting, and is the CEO doing up nefarious things? Also, no, because they can't do that. So,
yeah, again, it goes through its own cycle. I'm not really too concerned about Bitcoin at all. I don't really look at it as closely as I probably should be. I'm reading this, and I was reading this on the plane back. This really addictive book on the founder of the Silk Road site, and just the story of like surrounding his capture and all that. I'm about halfway through. It's called American Kingpin. Really good book, but essentially it talks a lot about Bitcoin because all the payments are in Bitcoin. And back then in like 2012, 2013, it's just insanity just to see 10 years later where this price, has gotten and how much it's appreciated over time. I think with Bitcoin, that's something that just like if I had to break out my portfolio in terms of what are the things I am thinking about selling in the next month or the next year versus in the next decade, like I'm not even like Bitcoin is not even a consideration for me to sell at all. There's 10 or 12 or 20 other things that I would sell before I would sell, like even consider selling Bitcoin.
yeah, for me, crypto is a bit of a hedge. It's a very volatile hedge. I have some physical silver as well, but that position, what I have in it, it's not large compared to my portfolio. But I figured, I'll just keep it there, see what happens. Now, as far as long-term holds, throw this up. We were talking about semiconductors, so Nvda. You own a lot of these. I think you own Micron. Is that correct? And Broadcom.
I only own Broadcom out of this entire list.
Oh, really? Okay.
Yeah.
So this is looking at revenue growth of 2025. So next year, this is forward revenue. And of course, Micron is up pretty good. It's very cyclical, so I wouldn't expect that, like even more so than the other. But Nvidia is up there, of course. Broadcom is close to the middle, 15%. At the very end, Intel. You don't own Intel in your dividend position?
No.
Why not?
Because ever since Apple dropped them and started the M1 chip, I was like, okay, I don't really want to own Intel right now. I just like they would fall closer to value trap territory in my brain. I know Steven Fiorillo would disagree with me, along with a whole bunch of other stocks. But for me, at least, Intel is not the first stock that comes to mind when I think of a forward-thinking, innovating company.
Yeah, I think that they've been very poorly managed. I had this so my oldest son, he's buying himself a new computer, and buying different parts and customizing it, and so I asked him because he's looking at graphics cards and CPUs. I was like, okay, so you have Intel, you have Nvidia, you have AMD, all that he recognizes. Micron, I didn't even bother with, but I'm like, okay, of those three, which do you think is the most highly valued by market cap company and has grown the most over the year? he's like, yeah, Nvidia, of course. And I'm like, yep, absolutely. And so of AMD and Intel, who do you think next? He's like, well, Intel has some really good processors, this and that and the other. United States company. I think you said something about government investment. Intel, obviously, like that's what I would think too if I wasn't in the markets. Now, following the markets, it's not just a price action. Let me pull up Intel's stock. This thing is the definition of value trap. So value trap is, of course, when you think it's cheap and it's not. Now, there are times, and I actually had a really good friend that invested in Intel.
$20.
Yeah.
Jesus.
Down 8%, 8.8% today. It was a hard day for semis. So over 5 years, it's down 60%. Max, yeah, it's up pretty good, but I mean, you're going back into like 1984. So you can see like the price level, like it was trading in this range like back in 2003. So that there is a value trap. Doesn't mean, and you can see it had highs and it had lows that you can't make money on, even value traps. But the biggest issue I think Intel has is, despite having all the advantages, they're listed, and United States government is giving them subsidies for billions of dollars to actually build foundries here in the United States. Probably actually a smart move. They have just not been well managed. They managed to lose, of course, that Apple contract. Competition is eating them alive, even to the point where I think AMD is outcompeting them. AMD has Lisa Su, who's a very good leader, maybe not Jensen Huang, but I mean, who does Intel have? Like, they keep changing hats around, but yeah, it's Intel. So I don't know. At some point, is there a point when you are interested in Intel, knowing that it's going to be expected to grow 7% revenue next year in what should be a bull market for this industry?
I mean, yes, but at the same time, Intel has like what 1990s prices right now. If you scroll down to that chart, go to Max, and you just take a look, it's at prices that it was at. It hasn't seen in like, well, it's comparable to 2 decades.
It's seen quite a bit. It's been, let's go back. So you can see this line here. It bounces up and down off of it. It hasn't been at this price, though, to be fair, since 2013, 2012. So yeah, it's grown a lot, but when you're growing 7% in the bull market, yeah, myself, I'm not tempted at all. I think that they even canceled the dividend. I'm not sure. I know that they had a small one at one point.
Oh my gosh, that would be like the #1 killer for that stock if they cancel the dividend, because every boomer is buying this thing for the dividend. And like, I think this is the main thing to consider when you're thinking about a value trap, is that the market is forward looking and looks at the growth rate of these companies. And if you have subsequently worse and worse and worse quarters, then your valuation is going to take a hit over time, because the prospects for you to earn out are much less.
Intel, $20 now exactly in overnight trading. Insane. 1999. There we go. Yeah, it's always tempting, when you see it and you're like, oh, it was recently up in the 60s. Yeah, it sure was, but not really by its own strength. Now, it does have some things going for it. They do have new leadership and management. I'm not sure on the dividend. I think maybe they just cut the dividend. They didn't cut it entirely. They just reduced it. They have the foundries that are coming up, but I am going to stay away. If it was trading at $10, I would stay away. Like, I'd rather, I know Nathan is a big AMD fan in the chat there. I'd rather invest in AMD or Nvidia easily, or Broadcom. I think that those are still, despite the turbulence of today, easier money plays than Intel. Intel might outperform, but it's a dead cat bounce, honestly. So
yeah, I don't like, with $20, you can buy 2 shares of SoFi. You can buy 1 share of Hims. You can buy a Subway sandwich. All probably better options than a share of Intel, to be honest with you. Like, you have a lot of stocks in the market, is what I'm trying to say, that you can buy. Yeah. Broadcom has treated me amazingly over the past year. It's up like 30% since I bought it. It's my 9th biggest position in my dividend portfolio. It's paid me to hold it for the whole year, and I love it very much. And this is after averaging up on Broadcom like 3 times throughout this year.
When you buy something and it goes up, that just shows you the strength of that. So Throw up Rumi's comment there. Intel has, yeah, I appreciate that. They have indeed canceled all dividend. It has 0 dividend now. So I thought I couldn't remember which way it was, but yeah, when you do that, and there are companies that do that and then re-add that later. Disney was one of those examples during COVID. A lot of actually happened during COVID. That was almost forgivable. In this time with the industry that Intel is in, like, man, I don't know. That's rough.
Yeah, I don't get that move. Like, I understand it in Disney's perspective because they like literally couldn't fund. Well, I don't know enough about Intel to comment on it, but in Disney's perspective, it was COVID. They had to shut down their parks. They couldn't really fund their dividend. They had to reallocate that capital to keep the lights on, essentially. But with regards to Intel, like, if you remove the dividend, you remove a huge incentive for a huge demographic of investors to buy your stock. Like, I own boomer stocks. I own Coca-Cola, for Christ's sakes. But at the same time, the dividend is a huge motivator for me owning those things because the stock won't move quite a bit. It'll be pretty low beta, but it'll pay me dividend all throughout. You remove the dividend off Intel, then it's competing with the likes of Palantir. It's competing with the likes of, all these companies that have good, amazing growth rates. And so you remove a massive incentive from a large demographic of investors who would have otherwise bought that stock. And that's only going to cause the stock price to keep falling. Like, I don't know. I think that with a lot of these stocks, if they go into value trap territory, it's like a vicious cycle downwards that just gets kind of brutal, and it gets more lucrative as a value trap opportunity. And yes, turnarounds do happen, but I don't know, man. I just think that they're few and far between. Like, if you put money on every single falling knife, and I mean this falling knife from a fundamental perspective, not from a stock perspective, the amount of turnarounds you're going to get, you're going to definitely catch a few, but you're also going to have some pretty bloody hands.
Yeah, there's another one, and I didn't think to even share this with you. I had a post on this back in December. I called this out as a value trap, and looked like for the longest time I was wrong, but maybe I'm right. Dollar General, of course, had earnings. Now, it looks okay today, up 1% on a pretty rough day. Year to date, 40%. You see that drop off, Tevis?
Jesus.
That's what happens when you have very poor earnings. And one of the signs of it being a value trap is that a strong company, they may not have a best quarter, but they will tend to look inside themselves and say, hey, we're working on this and that and the other. They might mention some things on macro. A weaker company will tend to just say, we're just going to stay the course and do it more and blame external events that they cannot control. And that's exactly what Dollar General's earnings call was, that they do have a plan in place and they're building more stores, and those tend to provide a little bit more better revenue. And they're talking about the weakness of this type of consumer. The problem is Walmart reported, I think 3 weeks before this, and they killed it. And people were like, oh, well, that's because, higher income people are struggling. And so then they go to Walmart to save money. Well, I mean, the people saving money would be flocking to Dollar General too. So I don't think that's a full story at all. They continue to have declining margins, but there's no real turnaround plan here. It's just, let's keep blaming the situation around us, keep doing what we're doing. Let's even double down. And for me anyway, like, sometimes that works out. Sometimes that's absolutely the right thing. You just need a little longer on your strategy. Maybe that's the case here. I could be wrong, but there's a lot of competition, including Amazon getting in this market a little bit, just directly selling from China instead of using a go-between. You, of course, have Shein, you have Temu, and a lot of other competition. You also have pressures as far as labor pressures at the same time as disinflation, maybe deflation actually hurting their bottom line rather than inflation actually didn't hurt Dollar General that much. So, yeah, CVS is another one. Walgreen Boot Alliance, I think, is another one too. WBA. Good calls, guys. CVS, I didn't know well enough. WBA, I thought might be. But, we didn't talk SoFi tonight. That's on Friday. But SoFi is not a value trap. You know why? They're growing. They're growing rapidly. And they have a plan in place with excellent management. PayPal is one of those too, where they brought in all new management, different strategy, highly successful, competent folks. And I began to see the turnaround, and I'm like, hey, probably not a value trap. So I know we don't want to talk PayPal too much tonight, but Yeah, these things are so tempting, especially if we go into a season. I mean, maybe. I'm invested in you, man. So hopefully not.
I yeah, I yeah, I don't know. Sorry, I got lost in. I'm trying to find this chart for hymns because I wanted to talk about that. But yeah, I bought more this weekend. I don't know what the stock did. It probably went down. I haven't. Well, it definitely went down because it was a red day today.
It was okay today, actually. So I think
But I'm gonna be
up a little
buying more. I kind of hope it falls to 10. Honestly, like I just
bit.
kind
Me
of
too.
want it to tank to 10, and then I'll be buying a bigger chunks. But yeah, so like I started a position last week. I doubled that position on Friday, and who knows? I might double it again. I think it's like 2 or 3 doubles away from being in my top 3. So
Yeah. Just 2 or 3 doubles, those happen. But I mean, honestly, we're still in a bull market. This is one of the weaker months. Not always the case. Election year tend to be a bit of an aberration, but today was definitely a weak start. Tom Lee himself, if you throw this up, had some thoughts. So this is like 2 minutes long. I think it's worth hearing. We don't play a lot of clips on here, but let me close my PMs. There we go. Are you gonna throw it up?
yeah, you shared it.
There we go. All right, there we go.
September's not great. We know, I mean, we always make lows in October, or we have many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. Well, the market's been up 7 of the 8 months this year, so we know it's an incredibly strong market. But we also have the September cuts, and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything. You have in the past actually talked about election-related trades and Trump trades. And did you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production.
More production.
Bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity. And the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I would say that's probably the market.
China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution.
Yeah, no shit, dude.
But in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but
that commentator, bro, how is he still employed at CNBC? Like, he is just so bad. Joe, I think is his name, something Joe. Like, he interrupts everybody. He has the dumbest comments, and he just doesn't, like, I don't know.
He's very political too. I'm actually surprised that they have kept him. I like him actually because he is very different. Like, my opinion is you don't want every single person to be exactly the same, and he is something else out there. So, but yeah, Tom Lee is on there like every day. He might as well just be a regular feature. So, what do you think about that? Are we? Do you think that we're going to dip this month? Like, is typical or is it an aberration? And if so, is this a dip worth buying?
I don't think I don't think it's one of Tom's crazier calls. Historically, September, October is fairly weak. The market picks up steam in November, December with the Santa Claus rally. You have an election coming up, and they're starkly different policies at stake in that election, one of which is very preferential to the market and the other one is not very preferential to the market. And there's a lot of uncertainty. Uncertainty kills rallies. So, yeah, I think there's a very, very safe bet to make to say that the market is going to be down or at least have a pullback over the next 2 months. I don't think that's a crazy take. I agree with that take. I subscribe to it. Is the market pricing in a Trump victory? I think the betting markets are. If you go on Polymarket, actually, let's do it live. Can we go on Polymarket?
You can.
Here, I'll throw it up. So this is what the betting markets are currently pricing in. So let me just share my screen. And for those who don't know, there's several different betting markets out there. This one has $790 million bet. 51% chance that Trump will win. So the markets are right now pricing in, it seems, a Trump victory. I found it interesting that he was looking at Bitcoin and energy specifically. But here you have all kinds of different things, Super Bowl, whatnot. People just love to bet on shit, I guess. Will Biden finish his term? 86% of people think yes. Okay, let's take that down. My point is that if the markets were not predicting a Trump win, we would probably have had a pullback much earlier than right now. The pullback right now over the next 2 months is that margin of error, at least in my opinion, for the uncertainty that could happen around elections. You could have some, tampering, or you can have some civil unrest. You can have all kinds of shit, man. The debates are coming up. And so it makes sense. Is it a buy the dip moment? Absolutely, right? Because then you have rate cuts that are coming in September, and that's going to start a cycle of further rate cuts. There is still that 50 basis point, option on the table from Powell. Overall, I do think that post-election, the market is going to rally. I mean, that all depends, right? If you get, depending on how the election goes, we could also get a further decline. Who knows? I personally subscribe to the notion that it's going to be rocky over the next, until the election. And then post-election, we're going to have a couple of rate cuts in the pocket. You're going to get the right candidate who's pro-market, and the market's going to rally off that. That's my belief, but I'm no Tom Lee.
Yeah, I agree with most of what he said. I think he's wrong on energy. Actually, even though it's done stealthily, there's been a lot of drilling under the Biden administration for oil. They know that was needed. It's not a big part of their platform, and so it doesn't get the headlines. But the United States became, again, the world leader in producing oil. We're the best at everything, including obesity. So. No, other than that, it's a typically seasonal week. Usually that seasonality doesn't click in until the second half of September. So this may be some front running of that. Markets don't really like uncertainty. I think today was mainly more a little bit of reaction to that ISM manufacturing report, a little weakness there. So maybe just pricing in that a bit and then just taking some profits. We've been running. I don't even remember the last week that we had that was red on the S&P 500. Was it 3 months ago or something? It's been a long time. So yeah, absolutely. It's not crazy to think that we'd start out a little bit red, and it may continue the next couple of days, especially since Nvidia is such a large part of the market with the DOJ thing coming out after hours. Tomorrow's probably going to start red. Maybe it doesn't end up that way. Now, is it worth buying a dip? I think so. I'm a long-term holder. I don't do a lot of swing trades and things that I plan to hold just for a couple of weeks or a couple of months. And it's not bad to inverse Tevis. You probably make some pretty good money. Short term, long term, you're going to get killed because this guy is a genius when it comes to that.
Well, so I definitely wouldn't go so far as to say that. But what I will say is that, like, I don't know, man. I understand that compound, like CAGR, is a real thing. Compound annual growth rate of your portfolio returns. That's a real thing. But I also do think that a lot of people get super hyped to see their paper gains, and that's amazing. Like, I want everybody to win, absolutely. At the same time, those people aren't selling today or tomorrow, you know? And so if you have like 9 amazing years of paper gains and on the 10th year it goes to shit, then and you sell on that 10th year, then that's obviously going to hurt your performance despite what you had previously thought it was going to be. And so for me, like right now, I'm at a point in my life where I'm hoping more that the market goes down than the market goes up, because I know that I'm not going to be selling anything in the short term, right? Like for SoFi, I know for a fact that there will be people that, let's fast forward, I don't know, let's just say 2 years, and SoFi is at $30. There's going to be people that are going to say, oh my gosh, why didn't I buy this at 6? Why didn't I buy this at 7? And the fact of the matter is that they had years and years and years to accumulate and build a position. My position in SoFi right now, it's way bigger than I ever thought it was going to be as I build conviction in that company. I think as I build conviction in new companies, and HIMS potentially being one of them, you know, Celsius, higher and higher conviction, so on and so forth, I'll be accumulating those stocks for years to come. If HIMS were to go like from $15 where it is right now, and if it were to go to 50, ultimately that's going to hurt me because I don't have enough money in that stock to make life-changing returns. And I will have exhausted the majority of that move upwards because the velocity is so quick. And so I would rather have a SoFi any day of the week if I'm having a 10 or 15 year time horizon than a stock that does like a 3 or 4 or 5x this year. But then you got like, you know, compounders, the 10 baggers, 15 baggers, whatever, that they just keep keep doing that every year. It's tough to find those, but again, like I'm perfectly fine to take heat in the short term for stocks underperforming over the 1 or 2 year time frame, so long as those same stocks, when they do move up, I will have accumulated a sufficiently large position in them to actually make some big dents in my portfolio performance.
Yeah. In every stock that I own right now, other than miners, although if miners keep taking even them, and Robinhood, which I'm trying to scale out of by January, I plan to, if we keep dipping, there are prices that I'll buy. Palantir's up a good bit, so, and I have a lot of it, so probably less so unless we get like to $20, then I'll absolutely add more. But yeah, SoFi, PayPal, Tesla is actually one that I have some money coming in tomorrow that I'll be buying, and just keep buying a few shares a week on Tesla and building out that position, because I mean rate cuts are coming; it's inevitable. And I would actually be shocked if we don't get any September. I don't think the market is pricing that in at all, despite well, especially given the manufacturing news. Jobs data might change that actually this week, but we'll see. So yeah, dip worth buying if you have long-term horizons. Are there any new positions that you're tempted to get into if a stock falls to a certain price that you don't own right now?
I don't know. It depends on the stock and it depends on the price. There's nothing that I'm like actually like refreshing the screen every day to see if it's fallen down. But you know, if I have the dry powder and if a stock fall, like I think if Nubank falls, you know, I would buy it. I think if a bunch of stocks fall, I would buy them. But there's nothing specifically that, you know, I really want to, like, I'm like, like, see, the thing is with me, like, I'll get into a really stupidly shit valuation for a stock if I really like it. That's bitten me in the ass before, but
Everybody has. I mean, like, honestly,
like I would rather that though than never get into, you know, a good company at all because of the valuation. Like, I don't know.
Yeah, for me, it's HIMS. Like if it falls to $10 or so, and I need to start looking at Nvidia. If this Department of Justice thing and seasonal stuff brings it down low enough, I don't know what that price is. I don't know where I'm comfortable in it, but I don't know that I'd want to hold Nvidia for like ever, but for 5 years, I think it'd be a really good position. So they're killing it. They're growing rapidly. I think there's more upside there, but I am a cheapskate. If I don't know a stock well, I like a margin of safety there. That's why HIM's at 10. I think that I'll get a starter position and just add to it as you buy more and tank the stock. So when you stop buying, let me know, because I know that I'll need to load up at that point. But I mean, that company is growing massively. There is a lot of competition, but some of the competition just has not made it. So Walmart tried to go into that business. Teladoc, not exactly the same thing, but there's some overlap. Like they fell dismally. So HIMS, whatever you think politically, HIMS has management that actually knows what they're doing. So they're growing rapidly. And yeah, at a certain price, $10 a share, I'll jump in.
Yeah, I mean, they just launched a new product. They're consistently bidding up essentially their forecasts. I saw this post, which I was trying to throw up, but I'll find it and I'll throw it up in a future video. I want to make more videos on HIMS because I've been reading more about it, and like I just like what I read, right? And I want to see other bear cases because I haven't been able to formulate a strong one in my mind, and I don't like to be in that position. But they just launched a new product, recently. They're growing quite, quickly, and I think that even if it were to fall to 10 or lower, it would just be an even better valuation. I mean, they're a $3.2 billion company, and they're like on an annualized run rate going to do $1.2 billion. Like they did, however that shakes up to like 350 million, 400 million for the last quarter. So the point being that this company is really strong, fundamentally speaking, and the growth rate is like 50% plus growth. So, and they're doing buybacks. They approved buybacks over the next 3 years, 80% plus margins. Like, what more do you want, man? Zero debt.
Dividends, obviously, not really.
Well,
not on the company at this stage. I would say that the bear case on HIMS is competition, that there's a lot of competition in this space, a lot of private competition. They're able to do some things that they wouldn't be able to necessarily get away with as a public company. Not that there's anything shady, but they also have massive companies like Amazon that are going more and more into that space. Now, the reason why I'm still interested in HIMS is, despite that, the reason why there's so much competition is because Eli Lilly, by the way, another source of competition. But the reason why competition is going into this space is because it's a space that is growing rapidly. And the main competition is not these types of companies that have very little overhead. It's the old guard, where you'd have to go into a doctor physically and have that note filled out and everything. That's their primary competition that they're eating right now. And so this is not a winner take all space. It could be a winner take most. It gets to a point where there's maybe 3 or 4 major companies that are in this space. And I think HIMS could be one of those winners there. So I'm not like, it's not my most exciting play, but I see the merit of it. And at $10 a share, with the growth that they've done, with what they have on the horizon as far as products, yeah, I'll jump in there.
But here's the thing, and let me push back on it because I'd love to hear your thoughts. $10 a share, I would love that too. I would buy it like right now on the spot, pause the podcast, buy the fucking stock. But it is an arbitrary number. It's not like we're doing a discounted cash flow on this business to determine like what is it's a nice round number to buy the stock at that's lower than $14. That's a 40% gap, And so like I'm buying it at 15. I'll buy it at 10. I'll buy it at 5. I'll buy it at 2. If nothing fundamentally changes, I was the one who's buying SoFi in the teens. I was also the one who was buying SoFi at $4. And so my point is that there's nothing really stopping you from starting a small starter position, because the competition that I'm seeing right now, like the main bear cases that I'm seeing with regards to HIMS, are almost exclusively around the weight loss products by the big dogs, right? The Eli Lillys of the world, the large producers essentially rolling out their. But like the market is massive, man. Hims has 1.9 million subscribers, right? Like they have what, like 1/4 the size of SoFi's total user base, something like that. And so the total addressable market is like well over 100 million for just the US. Yeah, right. Because you have to mix all, it's not just weight loss. It's like hair loss, it's skin, it's all this other crap. And so, and of that 1.9 million, less than half of them right now are doing personalized solutions, and personalized solutions is their entire moat. If I can mix 4 of my medications into a single pill, let's just say in a hypothetical universe, why the fuck would I ever take 4 medications ever again? I'm just going to take one pill. It's easier to remember. I get it personalized. I get it in the form factor that I want, and I get it delivered to my house. There's a sense of convenience, a sense of privacy towards that. And so I just think that that piece of it, when you extrapolate out into the bull case, like I just think that piece is going to be a differentiating factor for them because they are a D2C brand. They're not in like a, I have to go into my local pharmacy and have this prescription and all this shit. Like it's all online.
Yeah. So June, the full name is Hims and Hers. They do have prescriptions that are specific to ladies as well. You make a good point that if you have the conviction level that you do, you're more convicted on Hims being a winner than I am. I think it will be, I'm pretty sure, but you're like, it just makes sense at this point. Buy it, at this level. I don't think that's wrong over the long term. Myself, I have not as much conviction in it. I think that they're good. I do see some weakness here and there. There's nothing glaring. I just know this industry has a high failure rate, and Eli Lilly, even Costco, is looking to get into this. But
that validates the market, man.
It does, but
if I start an itsy bitsy garage business and Apple all of a sudden enters my business, like it validates what I'm doing.
Yes.
Like imitation is the best form of flattery, or whatever the hell that quote is. And that's the first thing. And then the second thing is I think with Hims specifically, this is massive markets that they're playing in, and they're releasing a new product every single quarter. And so, again, I don't know a lot about the company. They're still I have to look at the stock-based compensation. I got to look at the dilution. I got to look at so many other things to form my own, more comprehensive opinion. Right now, I'm sort of just reading up on the latest reports and trying to wrap my head around what the bull case is. But it's diverse enough for me to be confident that they have a moat that's not just advertising, even though that's their biggest expense right now.
And I really do like the AI piece that other companies have tried to do this and they've not really done much with it. But as far as taking your information and people that match your profile with your type of prescriptions that you're taking and then running that through the algorithm, it's better than what doctors do, frankly. Doctors are like, hey, yep, this should work for you. And if it doesn't, then you'll try this. And if that doesn't work, we'll try this. Do you have any allergies? Okay, great. What other medications you're on? There's no interactions that they know, but they're human. You can miss things. And there's little things like, I've got some red hair. I don't know how easy it is to see this, but for whatever reason, red hair, people that have red hair follicles end up being more resistant towards the effects of anesthesia. And I didn't know this until 6 or 7 years ago. There's documented studies that have been published and peer-reviewed that indicate that that's real. And that's one of the reasons why I hated freaking going to the dentist, because it still hurt. And when I told my dentist this, he had never heard that in his life. And he's like, well, maybe that's why you and several other redheads take 3, anesthesia shots. It's like, yeah, we take more. Plus I'm a big guy. So, and there's all sorts of little things like that the algorithm could find. So yeah, I think it's not bad valuation here. 10 is arbitrary, but it's that figure that I set in my mind. It does have that psychological resistance that I think if we get there, I'll probably buy honestly a little bit above 10 because I don't want to do the same mistake that I did when I was like, oh yeah, Tesla will go to $100. Went to 101. So I bought it on the rebound at 145. Still a killer price. Speaking of Tesla, I don't know if you've seen this news. I love this. I don't have it yet. I tried the dumb version of this, but Sawyer mentioned this as well, that This has been something that Tesla's been waiting on for a while. When they removed the hypersonic sensors, there was talk that they were going to be working and fixing this. This is several years production in the running because they wanted to get it right. And so this is not just Smart Summon, which is the previous name, but actually, I love the way that Tesla does that, Smart Summon. And yes, that is probably intentional knowing Elon Musk. So Smart Summon feature is this, that I am standing out there, I've got my groceries in my hand, and I'm like, hey, it'd be cool if my car comes and picks me up. And so they're waiting with my basket. I use my phone, and I go ahead and I can see all the cameras and everything on my phone, and I can pause, I can intervene at any point, but it's using that full self-driving tech stack to navigate through the parking lot, which it previously could not do well at all, right to where you're at, or the other way around, that you have it drop you at the door and it goes and parks. So it's like magic, but with more tech and less hand waving. That's at least what they said. Now, the other thing that I love about this is the existing version, they call it dumb summon. And it is dumb. It does not work at all. I've tried to use it before, and it just was a dismal failure.
So if you scroll down on that post, somebody commented on the Australian version, and that name is very much intentional. The Australian version is called Autonomous Road Summoning Experience, ARS.
Yeah.
So the naming convention is very intentional. I saw a video, maybe it was Holmars, let me see, on this being used in like, oh, here. I can't remember where I saw it. I didn't save it, or did I? I don't think so. Anyways, or maybe it was Tesla themselves posting. Hold on. Yeah, okay, cool. It was Tesla themselves. Let me pull this up. Just give me a second.
While you're pulling that up, I am very, very excited to try out that feature on the Tesla. This is the one feature, by the way, even more than full self-driving, that people that I know that don't have Teslas, that are not too interested in the car, they think is fascinating. And I had one person just say, hey, can you summon it? And let me just see how that works. And I told her, no, it sucks right now. After this rolls out to my vehicle, I don't think I'll be able to say that. But
so so check this out. This is just driving signals and everything.
Yep, the blinker.
Yeah.
Just like full self-driving.
The first thing I thought of is, what if this thing gets into an accident as it's being summoned? And not only that, but my stupid brain went to like, what if this thing runs into like one of those like insurance scammers that jump on the hood of your car or something, something like that? Like, who is like, is the driver going to blame Tesla? Is Tesla going to cover that, or is the driver going to cover that? Like, you just go into a whole rabbit hole of legality here. But the other thought that came into my mind with this was that this really is the soft launch of like that robotaxi vision, right?
Mm-hmm. It is. It's necessary. That was the piece that was missing the most, is that pick up and drop off. Like the rest of it, 98% seems like it's, I mean, there's things to work out still and improve, but this experience, I would always disengage. The first time I used full self-driving, I went to drop off my son at Chipotle, and it decided to go in backwards in reverse through the Popeyes drive-through to get to Chipotle. And I was like, okay, I need to take over, and I'm never letting it drive through parking lots ever again. Like, so it doesn't even like to do it, honestly. So
hold on, yes. let me pull this down, because I think that's a really interesting observation, Roy. Like, here on this podcast, we've talked consistently about full self-driving and how amazing it's going to be and how cheap it's going to be and how readily it's going to be adopted. And, one of the things that we've also mentioned is the fact that, hey, there's a lot of people who would be scared shitless to try this. And with the Smart Summon, of just pulling, like backing up from a parking spot and driving through a parking lot to get to you. If one thing goes wrong, you're never going to trust that thing again. And even if everything goes perfectly, you're still going to be like, you know, nervous about it, the whole process. Like it's never going to become really, or it's going to take a long time for it to become really normalized for you. And every single opportunity that this thing is autonomous is an opportunity for you to lose all your trust in it.
I mean, somewhat. It depends what exactly happens. Now, on as far as like whose fault it would be, I would guess, and I haven't seen this yet, that there's some sort of legal agreement that you click on to use it, like you do with full self-driving, that you agree to maintain control of your vehicle at all times and so forth. You do that with autopilot as well. And so you're ultimately in control and you're watching it the whole time from your phone. And so you can stop, you can intervene. Now, as far as other people like intentionally getting in wrecks or getting hit by the car, I think that the Tesla is good enough as far as it's not full self-driving, but that's what the tech stack that's being used there. It's good enough that it would avoid most of those. And those that it's not, it has 360-degree cameras. Like somebody jumps out in front of your vehicle and you'd be like, oh, it was totally the car's fault. It's like, okay, the car was stopped and you literally ran your body into it. That's you hitting the car, not the other way around. And guess what? I can sue you now. So I don't foresee that being much of an issue. Now, as far as like, if you, I think that's one of the reasons why they took so long on this, is because they know this is the most critical aspect of that full self-driving feature, that because there's so many people, there's so much chaos and entropy that's happening in those parking lots, especially larger places. So it has to be perfect. Like 99% good is not good enough. And so we'll have to see how good it is. I know a lot of people will be using it. Now, as far as, you know, people being comfortable using it, I was not comfortable using even autopilot initially. I wasn't even comfortable driving the Tesla, to be honest. Like it's such a different experience. And then going from that to an autopilot, then autopilot with the steering beta. And I'm like, yeah, this is fine. Full self-driving, it took probably a week before I was like too comfortable with that, I'll say. Let me just say that. I won't say how I'm paying attention. I'm doing what I'm supposed to be doing, but I think it'll be the same thing with this, that the first few times you do it, you're just on pins and needles, your fingers right there ready to stop it at a moment's notice. And then after, you know, use it the first 30 or 40 times and it's flawless. Yeah, you shouldn't do this, but you might just be like smart someone, you just put your phone back up or you start scrolling on Tevis's Twitter page.
So here's the thing, and like I'll just read June's comment. June says, if I got a rental car with FSD for the first time and it did weird stuff, I'd probably not give FSD a try for years again. And one thing I will say is that, like, Elon has talked on podcasts about this being a massive hurdle for the development of FSD, is the fact that the software has gotten progressively better over the years, but people still think of FSD as the same as that one time they tried it in like 2019 or whatever. And the rate of improvement is very large, but people are just reluctant to give it a chance. But the other thing I'll say is that I think with this, the Smart Summon, the fact that you're not even in the car adds another layer of difficulty to the matter, because it's not like trying FSD where, and even with this, Roy, I've seen videos of people trying FSD and it does some weird shit. It just does like a sharp turn or something like that. And there's kinks to iron out, essentially.
Oh, yeah.
And that's what the driver grabbing the steering wheel and preventing an accident. Imagine now without a driver at all. Like, I mean, Lurker was saying it as a joke, but like, just think about this, man. Like around Christmas shopping time, like you got a parking lot full of people, you got snow and ice on the ground, you got so many different things. Like, it's just scary. It's a scary thought for this thing. But on the flip side, you know, if this does get adopted and trusted and whatnot, like, it is a lower hurdle for the actual robotaxi. Like, this is a soft launch for robotaxi, essentially.
It's that, plus it's a software version of the Cybertruck, where it's something that no other company is doing. and it gets people's attention, and it gets their imagination, it gets their heart racing. So whether they like it or they're against it, they're talking about it, right? It's the whole no news is bad news. I think that was the right saying. So I think it'll be done well. I can't imagine that they would be releasing it and it's just, fraught with issues, because that's really going to hurt it. But as far as full self-driving in a rental car, other than something like Toro, where an owner perhaps has full self-driving engaged, and even then you could limit that if you're renting it out. You can't rent a Hertz and use full self-driving. You can't even do a demo drive with Tesla and use full self-driving. How do I know? I requested to do that, and they said absolutely not. You need to be the owner in order to engage full self-driving.
This is the top comment right here. This is, for me at least, this is the top comment. If this thing can drop you off at the door of like a mall or whatever and just go find a parking spot for you, then it's like top tier technology that we need. And it doesn't even matter what parking spot it finds or how far it finds, because you're just going to summon it back to pick you up.
I know that it can drop you off and go park. I think you might have to tag where you want it to park. And maybe I'm wrong on that. I know that the old auto park, which I used, was functional, but that you had to be in the car for. And it was a little bit slow and hesitant. It's like a 18-year-old driver that, is maybe not fully confident yet. But it always does a good job of parking perfectly in there, even if it has to do a little bit like grandma. But that's exactly right. That there's some areas like I'll do. I visited somebody in the hospital like last month, and parking at that place was just a freaking nightmare. It would have been so amazing to go to the door, be dropped off at the emergency room, and then just say, "Okay, go park." I don't think it's there yet on that sort of thing. Like big empty shopping lot parking lot, yes. Parking in a parking garage, probably not.
Yeah. I mean, that's good progress. And don't forget, October is just around the corner, right? It's October 10th is the Tesla event
10-10.
for Robotaxi.
Yep.
That's just around the corner. So we're bullish on that. I don't know what the next Optimus thing is going to be. But yeah, I mean, like my whole thing about Tesla is the lower rates, but we've heard that before.
Well, I already know what the next Optimus thing is going to be. On October 10th, robotaxis, that robo part, that's Optimus. So they're going away from full self-driving, having Optimus drive the vehicle for you, so you feel safer. Not really.
They're definitely not going to do that.
If they did that, I would be like, okay, I probably need to sell my shares at this point, because it's a funny joke, but like, please don't be serious, guys. Can you imagine?
Dude, like, I mean, let's have our faulty robot drive our faulty full self-driving software, and you in the back seat as the guinea pig.
Yeah, well, it's just there to take over for when the full self-driving can't handle the software, and it's like, oh goodness, this is terrible. Now, what would be really fun is if the robotaxis scale out, and then like Waymo, that they have somebody on the other end to navigate the last little bit in case if there are issues and weird things come up. But that person on the other end, that's the Optimus bot. It's just, or Dojo. It's like the supercomputer. It's like, I can handle this. I got you. I mean, that's not realistic. That's not what's happening. But it would be, I don't know. There may be some jokes in there, knowing Elon. So
definitely. Anything else to chat about? The chat has just become like a private DM between Not a Lurker and ETF at this point. Anything else that we want to cover?
I think that's a pretty good way to end it. I'll just like to recap. September tends to be seasonally weak. We're both interested in buying the dip and continuing to buy the dip throughout the month. I still have a lot more cash than I'd like to have. And I've been gobbling up Tesla. I'll keep doing that too. A little bit of SoFi here. Those are big rate cut plays. And I think rate cuts are all but guaranteed September 30th. So we've priced in those, I think. So I wouldn't get too excited, by the way. September 30th might be a sell the news type event either way. But I do know that rate cuts will help those companies tremendously. So yeah, more red, fine. all averaged down.
Yeah, like I'm not saving up, money in my piggy bank to buy the dip in September, October. I don't know what the future brings. I'm just buying every 2 weeks, whether it's a green market or a red market or, up or down or in circles. I bought some QQQ. I bought some Amazon. I bought some SoFi. I bought some HIMS. I'm probably going to go back to buying some QQQ, buying some Amazon. And then probably in a couple of weeks after that, some SoFi, some HIMS. We'll see.
So what I'm hearing is you're going to crash the markets. It's going to be a bear market. So I take back what I said. Don't buy the dip. Let him create the dip, and then you can buy it.
Let me tell you, I have. Let me just do this real quick. I have a whopping 30 positions in. I can't even call it my dividend portfolio anymore. It's my boomer portfolio. It's my long-term boomer portfolio, and in that portfolio, I have non-dividend companies. Like I have SoFi, I have Tesla, I have Amazon, I have PayPal in that particular portfolio, and it's just smaller sizings. But of those 30 positions, I started this new portfolio mid-January. The worst performer I currently have in there, and this is why I love it so much. The worst performer I currently have in there is QQQ. And I'm and I'm down 5.3% on my QQQ position. The second worst performer is Amazon, where I'm down 2.6%, and then everything else pretty much is in the green. I'm also down like 1% on Starwood, but out of 30 positions, man. And so, and yes, Rodolphe, I own BN, so I couldn't buy BPYPN. But I own BN. It's a beautiful thing, man. I don't know. So QQQ and Amazon were my most recent buys. Those are the only two that I'm negative on. I'm going to be adding to those specifically, and everything else is just doing well. Not as well as perhaps it was earlier in the year. Like they've taken a dip, but they're not like in the red. We're still up significantly on the year. In that portfolio. So I'm quite happy with it. Buying more, yep, like every couple of weeks. So I'm not too worried. And then you go into the other portfolio and it's a little bit more mixed. The HIMS of the world, the Coinbase, the Clean Spark, the SoFi, the Tesla, that kind of stuff.
What not to buy until Tevis is done buying.
Exactly. Yeah, that's exactly it. All right. Let's leave it at that tonight. I will try to get. We'll see, because I got 3 days to catch up in my work stuff. But I'll try to get a HIMS video hopefully in the next couple of days, maybe, and then SoFi Weekly on Friday, and go from there.
All right, sounds good. Yeah, check him out for HIMS content. He's got a video up already. I think it had like 5 views, so make it the 6th one.
Around that. All right. Thanks everybody for watching, and we'll see you in the next one.